Hi, I'm John Boughton with NAR. In July, President Obama signed changes to FHA condominium financing into law. The U.S. Department of Housing and Urban Development is writing the rules that'll put those changes into effect. Among the reforms, the rules are expected to make it easier for condo projects to get government approval for buyers who want to use FHA financing. In addition, lenders in some cases will be able to issue what FHA calls spot loans to buyers of condo units in developments that have not been approved. We're going to be walking you through the rules in just a minute, but first, to give you a sense of how the rules will help you serve more clients, I spoke recently with Fleur Haugill, a realtor who handles condo transactions. We met outside a condo building not far from NAR's offices here in Washington. Fleur, as you know, there's been a lot of talk about FHA rules that affect condominium buildings, some of the restrictions they've put. One of the big ones was that in a building like this, if it wasn't already FHA certified, in the past, a buyer who wanted to get an FHA mortgage could get what was called a spot loan. Those went away, and now FHA has proposed to bring them back. If they're successful in doing that, is that something that's going to be helpful to the market?
Definitely. That's a great thing. Bringing back the spot loans will certainly help. So the biggest problem has been that a lot of these buildings aren't FHA approved, and to get approval it takes 30 to 45 days. Well, in this aggressive market that we're finding in DC, that's too long. Most settlements are happening within 30 days. So again, what that means is that people aren't able to actually get the property they want. Opening this up means it's going to be a lot faster turnaround. People should be very happy with that.
Well, another big one that people have been talking about, realtors have been focused on the owner occupancy rates. FHA had said for a long time that no more than 50% of the units could be occupied by somebody who didn't actually own the property. NAR has been supportive of lowering that threshold to 35%. And then there's a proposal to actually do that. If that happens, is it going to be, again, easier to get a buyer into a building like the one behind us?
Definitely. So currently it sits at 50-50. So that means 50% are occupied by the owner and 50% rented. If they lower that ratio, then that's going to, again, make it a lot easier for the buyers to be able to get the property.
So another big one, I'm looking right down the street here, and there's a restaurant at the bottom of the property. Obviously, there's some commercial space. I have to imagine that's attractive to potential buyers, but again, FHA had put a cap on how much of the property could be used for commercial purposes. There's a proposal. Maybe they're gonna lift that up and let a little more of the property be used for commercial uses. Are you hearing from buyers that that's something they're interested in? And if they do that, is that going to make it easier to sell a property?
Again, easier, yes. So a lot of these buildings, particularly the new builds, they're mostly condominiums above, and then you've got restaurants on the ground floor. So that doesn't make a difference. It's more on the buildings. There's a couple of buildings downtown that we find you've got restaurants, then you've got office buildings, and then you've got condominiums above. That's where we have the problem. If they open this up, what that means is a lot of buyers are going to be able to actually buy these properties. The properties aren't going to sit on the market as long, as initially they were actually having to buy with cash because getting a loan on these was so difficult. So by changing this, yes, it would definitely make it a lot easier.
So it's good to get an on-the-ground perspective. Fleur, thank you so much for doing this. And we're back in the studios here in Washington. We've got a couple of policy points to go through, so helping me out through all of this is going to be Megan Booth, who is our Senior Policy Representative here at NAR, and Seher Siddiqui, who is our Regulatory Policy Representative. Thank you both for being here. There's a lot to go through, so one thing I want to mention straight from the top is if you have a question of your own, we're going to get to as many as we can today. So send us an email at realtormagwebcasts@gmail.com. That's realtormag, like magazine, webcasts, plural, at gmail.com. We're going to get through as many as we can, but starting straight from the top, Megan, we just heard a video about some specifics on working with an FHA mortgage, and if some of you got a client who wants a condo. But for a realtor who might be coming to this for the first time or who's relatively new to this, what are some of the first things they need to be thinking about in this process?
So absolutely. So the first thing would be, is this condo building already approved by FHA? And that's something you can easily check out. And second of all, is your client pre-qualified for the loan? Are they excited to get into a condo? And FHA is a great product for these first-time home buyers, especially 3.5% down, flexible underwriting. So it's a good way for a client to get into a condo. First-time home ownership condos are generally 20 to 25% cheaper, depending on your market, than single-family homes. And so it's a good option for a lot of first-time home buyers, people that are downsizing.
So they want to check to see if the building is approved. What if it's not?
it's not approved, it's a good opportunity for the lender, for the realtor to get in there and work with the condo association to get it approved. We've had a lot of realtors that have had success in their markets of doing this, of meeting with condo boards and teaching them about the benefits of being approved and working to get that building certified.
Okay, and so they're going through this process. Maybe they're going to help the building get certified. We'll go into the details a little deeper later, but what are some of the top items that they need to think about to know if the building's even going to be eligible?
So FHA has a number of criteria. First of all, they want to sort of look at the finances of the building. Is it generally financially sound? And they'll ask for a copy of the budget, a copy of the reserves. They'll want to know about the insurance. Is it 100% insured against damage and loss? Those are some of the big level things. They also will check on owner occupancy requirements. What is their owner occupancy level in the building? How much commercial space they have. These are all things that FHA considers when looking at a building for approval.
Okay. So, and now Megan touched on this a little bit, but Seher, again, for some of the folks who might be coming to this process, maybe are newer realtors, why would somebody want an FHA mortgage to begin with?
So, as Megan mentioned, the FHA mortgage is actually a really great product for a few reasons. Definitely the 3.5% down is great. If you are new, first-time home buyer, you just might not have had the time to develop the savings for a large down for whatever reason. So this opens doors to that way. Also, the credit level, you can have a much lower credit score with an FHA financing. So again, maybe you haven't had the time to develop the credit, maybe something happened and your credit's taken a little bit of a hit. This makes sure that you still have access into the market.
Okay, so you're dealing with the FHA mortgage. We're looking at some of the characteristics of the buildings. These are issues that I know realtors have been talking about for a long time, specifically the challenge of getting an FHA mortgage on condos sometimes. And there's a lot of talk about legislation that passed earlier this year. It was signed into law earlier this year, HR 3700, which I'm sure a lot of people remember reading something about that. But Megan, why don't you take us through a little bit about kind of what that bill was, how it came together, and what it all means for this business.
Great. Realtors have really been instrumental in the development of that new law. Starting back in 2007, the rules changed for FHA, and they really started. It became more and more of a challenge for people to be able to purchase a condo with FHA mortgage insurance. And the Federal Financing and Housing Policy Committee was really right out in front of that. They had working groups in 2012 and 2013 and 2014 to sort of narrow down what are the issues with condos, what are the specific outstanding issues that we need FHA to deal with in this condo process. And all along, FHA had said they were going to put out a condo rule. And so we kept meeting with FHA. We formed a coalition with some other trade associations, Community Associations Institute, the home builders, who cared about this issue to talk about what are the key issues we want. And then in 2015, the Federal Financing and Housing Policy Committee created a guidebook, a condo guidebook that's available on our website that sort of lists the outstanding issues, and then has our research department here at NAR did some great research to determine really what are the impacts of the condo problems that FHA is having. And basically the biggest one is that less than 20% of condos nationwide are certified for FHA approval.
Oh wow.
So it's really, really difficult to find a building that had been approved.
So 1 in 5 chance that if say you're looking at buildings that it's going to actually be FHA approved.
Exactly.
Okay.
And so at the May meetings in 2015, we actually had a staffer from the House Financial Services Committee come and speak to the committee about a number of issues. And one of the things the committee did at that point was present him with this condo guidebook. Well, in follow-up conversations, he was very, very intrigued by this and started having more and more meetings with us here at NAR about, well, what could we do about this? And that's how the legislation became formed, HR 3700, which did 4 things to deal with condos. Had to do with lowering the owner occupancy rate and having HUD review that. Looked at commercial space, making it less of a burden if you have a lot of commercial space to get a condo loan. Looked at the recertification process. Right now, the certification process, which takes about 6 months to get a building approved, the recertification process is only 2 years later and takes about as long to do. You submit the exact same packet. And then the last thing had to do with private transfer fees, which is an issue that some condo developments have where you have to pay a fee to the development, usually to pay for snow removal or trash removal or the pool. And that was something that FHA had prohibited. So those 4 things are the things that ended up in HR 3700, which unbelievably, in these crazy political times we have, passed the House unanimously by a vote in February of last year, and then passed the Senate unanimously in July. And how did that happen? A lot of people say, how did you possibly get legislation passed in this political climate? It's really because of you, our realtors. We had over 140,000 realtors respond to the call for action on HR 3700, which was huge, and that made a giant impact in Congress and got this bill passed and made into law.
So there were a lot of issues packed into that bill. The owner occupancy rate, the commercial space rate, we talked about transfer fees, and we'll go into all of those in detail later, kind of what the business side of those are. But Sarah, maybe you can give us the kind of where are we now? Because I know the law didn't finalize everything right away. So,
right.
So where do these stand?
No, absolutely. So what the law did for some of them was actually direct HUD onto dealing with it. So funny enough, while HR 3700 was going through the House, through the Senate, to the President, at the same time, HUD was working on their own condo regulations, which came out in September. And these regulations focus on 4 areas: owner occupancy ratios, limits on commercial space, the recertification process, and actually the reintroduction of spot loans. So these are all areas that are up for discussion. And one thing that actually happened just a few days ago, which is definitely a positive development, is that HUD issued formal guidance on owner occupancy ratios. So as of today, a condominium is required for FHA to have the 50% owner occupancy ratio, but they're actually allowed to go down to 35%, assuming they meet a higher level of reserves and their limitations on how much there can be delinquencies with their condo fees, as well as a certain number of financial documents. So
there are probably more buildings now that are eligible than were before.
Absolutely.
And that went into effect immediately?
That went into effect immediately. So buildings that are looking to certify or recertify now have this opportunity where they can have a lower owner occupancy rate.
Okay. So Megan, what's then, we know where the regulatory process stands at the moment. Looking forward, I mean, can you tell us a little bit about timelines and how long it could take to get all of this resolved?
So this is government, and
right.
It doesn't happen quickly. As we said, we've actually been working with HUD on putting out these, having them put out these regulations for about 5 years. It took them to get them out, but they at least have finally come out, and they definitely are a step in the right direction. There's some really good things, like Sahir talked about, that are in that proposed rule. So there's a public comment period that runs through the end of November. NAR will absolutely be commenting on lots of things within that proposed rule. And then unfortunately, there will then be an administration change, which always delays things. So there will be, the final rule we would expect to come out probably not before the springtime. I would say spring. They'll take in all the public comments over the winter, and then hopefully by that time the new administration is in place and is prepared to issue a final rule. So I would say things will start to change, but the 35%, as Sahir said, that goes into effect immediately, and then we will have lots of time to comment on all those other things that are in the proposed rule. And in addition, there's 2 things that were in HR 3700 that HUD hasn't addressed that we actually would expect to come out before the spring, and that's the private transfer fee part of the rule and also the commercial space waivers. Those should both come out before the final rule because they were required to under the law.
So we'll be paying attention on Realtor.org in the next few months maybe, and we'll see some updates on this. I do see that a couple questions are rolling in, so if you've got one you want to ask as well, it's realtormagwebcasts@gmail.com. We're going to be getting to those in just a little bit, but Sahir, let's drill down on one of these issues. Commercial space.
Sure.
We talked a little bit about it in the video leading up, so I know our realtor Fleur got into it some, but real quickly, what is the commercial space requirement? What are some of the limitations, and what does that mean on the business side for someone who's got a client that wants a condo in one of these buildings?
Sure, absolutely. So first of all, what is commercial space? Let's answer that. So think of it this way. A commercial space is space in a condominium building that is not space that someone is living in permanently. For example, a restaurant is commercial space. Offices are commercial space. Parking spaces can be commercial space if there are parking spaces available for use by the outside public. So think of a building in a downtown area that has condos in it, but if you're just driving in for the day, you can park your car there for a fee. That's commercial space. And right now, HUD has a limit of no more than 25% of the condo building can be commercial space. So that's where it stands right now. as Megan mentioned, the legislation directed HUD to address this. They haven't. What they've done in this proposed rule that I mentioned earlier is they're asking for comment on a potential new limit on commercial space, looking anywhere between 25 to 60%. As Megan mentioned, we're definitely going to be commenting on this.
Well, and that's not uncommon, though, right? For a building to have commercial space in it, and these are buildings that people want. This is something that is attractive to buyers. That having a restaurant downstairs, like we saw in the video, or parking, like you mentioned, it's got to come up pretty regularly.
Yes, absolutely. And especially when you're looking at a lot of the newer condo buildings that are coming up in areas, not just big areas like San Francisco, New York City, but even the next level of cities. So I'm talking about Austin, Minneapolis, places like that. A lot of people want to live in these walkable areas, and often that means condo buildings that, they have a grocery store in them, they have a drugstore, they just have useful things for everyday life. So the 25% limit really keeps a lot of people, as we mentioned, first-time home buyers, maybe people looking to downsize, out of these sort of ideal affordable locations.
So I know we've got a slide to go up with this, but I've got a question for you, Megan, that I think is going to be particularly helpful for people. They've got a building that a client is looking at. How do they find out if the building is FHA certified?
So that is really easy to do. As we said, unfortunately, only about 20% of buildings are certified, but HUD has a lookup tool on their website that you can easily go to. You can put in the name of your city, and it'll pull up all the condos that are already certified. It'll also let you know when their certifications are expired, or if they have been previously certified, if that expired. So if you go to HUD's website, and there's a link right up on the slide, it's very easy to be able to find which condos are approved and which buildings aren't approved. Okay.
We also have a question in that I want to get to. This one sounds like it could be a little technical, so you tell me if it's tough to answer, we'll get back to you one way or another. But if a condo association has the right of first refusal on sales or leases, is that a deal breaker for FHA?
It can be. It depends on how it's written.
Okay.
Right of first refusal is a tricky one with FHA. There's some things they will let you do. So, for example, you cannot say that you can't rent your condo unit, but you can have a limit on the number of condos in the building overall that are rented. The condo board could have that written into it. So it is a really tricky issue, and you should. If you go to realtor.org and look up on our condo website, we have the whole processing guide on there, and they talk about what kinds of, for the most part, right of refusal is not allowed, but in some cases it is for specific issues.
Is it worth then maybe talking with the person who manages the property and getting the policies and all that? I mean, is that information that's readily available from the building?
Usually, if you're in the process of doing a sale on a unit, you can get those condo documents from the condo association pretty readily.
Before we plow ahead, and Sahara, I can let you take this one. We have someone who asked for a clarification. She says, to be clear, HR 3700 directed HUD to change its requirements on condos, but HUD hasn't completely finished the work on that yet. Correct?
Correct. They haven't. So HUD was directed to come up with guidance before a certain deadline. And so actually, as I mentioned, they recently made this statement on owner occupancy. So they met their deadline with owner occupancy. However, the same deadline applied to commercial space. We haven't seen anything from them on commercial space. In addition, they were asked to address the transfer fee issue. They haven't addressed that yet. So those are two outstanding issues.
So this is sort of being done in pieces, and they'll be rolling out over the next few months.
Hopefully.
Right. Fair enough. And obviously we'll be keeping more information about that on realtor.org as it comes in and as we're able to make changes there. Another question about recertification. How quickly can a condo recertify under the new rules?
So that's a good question. Right now, when you are certified, it is currently good for 2 years. That certification lasts for 2 years. They say it takes anywhere between 3 and 6 months to do the recertification.
So realistically, a building is going through this process every 18 months or so?
About every 18 months. But in the proposed rule, there's specific language to lengthen that period to 3 years instead of 2 years, which would be great. And also there's language that would say that instead of having to resubmit the whole same package you did with certification, it's much more streamlined. You just basically need to update the information in your file. So you have to provide a new budget, and you have to provide a new reserve limit. But everything else you can just update. So for example, your insurance policy, you probably have the same insurance company, you just have to put your new expiration date. Your board of directors may have changed, you just have to update that. So instead of having to, you don't have to submit the plat again because obviously that hasn't changed.
Right.
So some of the basic things, if your condo documents haven't changed, you don't have to resubmit those. So it's going to make the recertification process a lot easier than certification, and extending the time to 3 years is definitely a step in the right direction.
And so that's not necessarily a change that the realtor is going to see for themselves, but it probably means that the building is going to be more likely to want to be FHA certified, or less likely to fall off the rolls, and maybe means more inventory for people?
We absolutely
if they have an
hope so.
FHA client?
Absolutely.
Okay. So here, can we talk about transfer fees for a second?
Sure.
So getting into this a little bit, we heard about them a little bit in the run-up to HR 3700. Can you tell us, or tell people why it matters, and kind of, again, what the process forward is going to be here?
Yeah, so right now, the thing you have to understand is that FHA doesn't allow financing for condos that have transfer fees. And what's interesting about this is that when you're looking at conventional financing, so Fannie and Freddie, they actually have a bit of a different rule. They don't like what we call bad transfer fees. So these are transfer fees that don't go to the benefit of the condominium itself, like bettering the property, maintaining things. But if there are transfer fees that are related to what we consider good transfer fees that do better the condominium project, Fannie, Freddie, conventional financing, you can go ahead and use that financing for those condos. So NAR is just advocating that FHA follow those same lines. We agree, we don't want people paying for things that aren't benefiting their own living space. But if it's a condo and it's for maintenance, upkeep, that sort of thing, we think those are good transfer fees and they should be allowed to FHA borrowers.
Okay, another big issue, and I know there's some excitement around this one, is the spot loans issue. I came up in our video a little bit. Why don't you give us the quick rundown on, for anybody who might not already be familiar, what a spot loan is, and then if and when they're going to be allowed sometime soon. I have an audience question about this from Seth as well, so we'll do two birds with one stone.
All right. So the spot loan is huge. About 5 or 7 years ago, HUD used to allow spot loan approval. And what that would mean would be that the building doesn't have to be approved. They don't have to go through this whole certification process. A lender could decide, if you have a buyer that wants to go into a building that hasn't been approved, the lender could approve just that unit for that buyer. And that really got around a lot of loopholes if there were buildings that didn't want to have to be certified, didn't want to go through the certification process, or perhaps were in the middle of it but hadn't been approved yet.
What if a building was still being constructed and they hadn't even gone through the process yet?
So the rules for new construction are slightly different, and you can't
Okay.
get a spot loan on a building that's not done yet.
Okay.
So the good news is, in the proposed rule, HUD suggests bringing back the spot loan approval. And there's going to be some requirements around it, but allowing spot loans, again, can really make a big difference in the market. It can really help with properties that haven't gone through the certification. And if you have a buyer that goes in there, and maybe you have a couple, there's going to be limits on how many spot loans are in a single building. But if you got a couple in there, then maybe the building would see, hey, there's a benefit of this. We have some good people living here now. Mm-hmm. We could go through this approval process, and that will help our building be more marketable. So that's the intent of the spot loan, is to do a few of them and to get the building more interested in FHA and willing to go through the process.
But the building itself would have to qualify for everything else already.
And our spot loan, it still has to qualify. It just hasn't gone through the process.
And just one clarification, so the timeline, we're looking at that same spring timeline for that. FHA says they want to do it, but
right.
Okay, it's a question of when it actually comes out. Okay, fair enough. So I guess I'll let you touch on this a little bit, Megan. But Sahar, I mean, thinking about the spot loans and from the realtor perspective, if they're thinking for their clients, what are the times when somebody might want to use a spot loan? When might be the right time to use this?
Sure, absolutely. So I think the easiest thing is, as Megan mentioned, a building that for various reasons may not be FHA certified but has all the requirements for that. If you've got a client who's looking at FHA financing, this could be a great option for them, and it's definitely worth checking out. It really opens up the inventory as well, so you can bring a lot of FHA buyers into this condo market through a spot loan.
So there's a lot here, and I think just one more time, if you could just give us from the top down again. I mean, the things that a realtor needs to be thinking about. They've got a client who wants to purchase a condo and thinks maybe FHA is the way they want to go. I mean, give us one more time the top down. What do they need to think about?
So first you want to find out if the building is approved, and as we said, you can find that out on HUD's website through their lookout tool. You also want to make sure that the loan limits are appropriate, the FHA loan limits are appropriate in that building, which generally they are. Condos are generally less expensive than other units, so they will generally be available. And then if the building is not approved, I think this is an opportunity where realtors can really get in on the ground floor right now because the rule's not coming out until the spring. And so there's been a couple changes, the 35% that went into effect a few days ago. They did make a few changes with the definition of what an owner-occupant was last year. So there's been some positive changes. This is an opportunity for realtors to go and meet with learn about condo boards in their communities, learn about condo buildings that may not be approved. And maybe the realtor has this opportunity to develop a relationship with that condo board and teach them why it's good to become approved. I highly recommend you go onto our website. There's a great video that was put together by the Orange County Association of Realtors that's available to everybody on our website that is to be used to show a condo association what are the benefits of getting certified. And it's really helped a lot of realtors work with these boards, and maybe this becomes your new market. It opens up a whole new set of properties for you. If you can be the contact with that building and help them go through the approval process, it has to be done through a lender, but you could help them go through the process, then you can be, you're in the ground floor of that property.
So there's a regulatory hurdle, but potentially there's a business development opportunity in there because the realtors are the expert who can help bring a building forward and kind of show them why this is valuable.
Absolutely.
Question that just came in, Seher. These new rules for FHA, do they also apply to VA loans?
Not yet.
Not yet,
Okay.
unfortunately. These are FHA specific rules.
Okay, so
for
it's
now.
strictly on the FHA
We're
side.
strictly on FHA. I understand where that comes from because I know that VA, for example, and FHA share a lot of the same regulatory requirements, and they're very common in like the type of aside from being a military veteran, but like when you're looking at some of the financial situations as well.
If you're looking for a lower, maybe a lower down payment option, they're both going to be in the mix.
Very reasonable question.
And I think that's something that we will be looking forward in the future, depending on how the final rule comes out. If it has all the things we like in it, we may be urging VA to accept, which is something they have done in the past. In the past, there used to be sort of a reciprocity. If you were approved by one, you were approved by the other. They don't have that anymore, but maybe there's a possibility to bring that back.
So you touched on this earlier when we got the question about whether or not a condo board could have the right of first refusal. But we also have a question about rental and leasing rules. And are there any specifics in there, anything a realtor needs to be looking out for that would make the building ineligible for FHA financing on the rental leasing side?
Right. So you definitely, the condo board cannot say nobody can lease.
Okay.
You can't say that. And so you can we have seen approval of properties that have a clause that says no more than X percent of the properties can be leased. We have seen that go through. But in general, you can't prohibit, it's considered a private property rights issue if you can't lease your property. So they can't tell you can't lease it.
So not on the condo board side, but they do need to be thinking about the owner occupancy situation. And you mentioned loan limits earlier too. Do you want to talk very briefly about what those limits are?
Sure. So the FHA loan limits now go anywhere from the high 200s up and through 625.5. That's the range of the limit. It's exactly the same for condos as it is for single family homes. It's all just one loan limit. We are hopeful that the loan limits could be going up this year. Later in November, next month I guess, the Freddie Mac and Fannie Mae will be publishing their loan limit, and there was discussion over the past year about perhaps the 417 floor that they use going up. If that goes up, the FHA and the VA loan limits are tied to that, or percentages of that limit. So if that goes up, all the limits will go up. So you should stay tuned. They usually publish it middle to end of November, beginning of December at the latest will be the new loan limits. But condos and single family have the same loan limit in each community.
Okay. So a couple more audience questions, and we can do these almost rapid fire style because I think some of these are pretty quick and easy. But you're looking at a building, maybe the building's not certified. You're thinking about a spot loan for your client. How would you find out what the owner occupancy rate is?
Yeah, no, so that's actually pretty easy. You actually just need to talk directly to the condo association or the condo board. They have that information on file. They're the ones who are in charge of maintaining that information, providing it to lenders. So you reach out, you ask them, they should be able to give it to you right
Building's
away.
responsible, you can call them, they'll give you the answer.
Absolutely.
Okay, and here's another one on the transfer fee issue. Who's paying the transfer fee?
So a transfer fee is a fee that's paid by the buyer of a unit on the sale of a transfer. And it's not just with condos. There's some homeowners associations that have these. And as Seher alluded to earlier, HUD has a blanket prohibition on all transfer fees. About 5 years ago, there was rulemaking done with Freddie and Fannie on private transfer fees. And like Sahara said, they sort of split the baby. Good private transfer fees are ones that benefit the homeowner. Bad private transfer fees are ones that just are like a slush fund to the developer or have nothing to do with the homeowner. So what Freddie and Fannie said is, if you have a good transfer fee, a transfer fee that benefits the homeowner, then we will accept that. And the legislation, HR 3700, requires HUD to mirror those rules. Like we said, they haven't put out a notice doing that yet. We are hopeful that will come out shortly, but the rules should end up being the same, so that if you have a transfer fee that benefits the homeowner, and it's usually a couple $1,000s that's paid upon the sale of the unit, and it's paid by the buyer, then we're hoping that those will also be good transfer fees and will be allowed by FHA.
And here's a question from a realtor on recertification, Sahara, and maybe you can help us out with this one. How would a realtor help get the recertification process started? I mean, do they need to be in touch with the building? Is there something that they can do to be helpful?
I think the best thing that the realtor do is, yes, definitely be in touch with the building. You know, make sure they're aware of, you know, the 2-year limits. You know, obviously the proposed rule makes the recertification process easier with updates, with a longer timeline. However, for right now, they actually do have to resubmit their entire application. So really the best thing the realtor can do is just make sure that the project is aware of everything they need to do, that they're timely on it, they know their dates. You know, as we've mentioned, the lookup on the certification also says, you know, when their date is due. So that's an easy thing to keep on top of.
So, we just got another one in, and I think it kind of jumps off of that. You know, if there's a building that's looking, I guess, either at getting certified or being recertified, should they wait until the new rules go into effect?
I would say no, because the process still, especially if it's certification for the first time, because the process takes a little while to do, and so you don't want to be waiting till the spring for the rule to come out and then start the process and still wait another 6 months. So I think it's good to at least start. You could at least start gathering your documents and getting everything in place. And if you find that you don't meet the requirements right now, then yes, you're probably going to want to wait. But if you meet all those requirements, there's no reason not to do it immediately. You'll still, if they put out the certification is good for 3 years, I'm going to guess that's going to apply to existing properties.
So there's no penalty.
I don't think there'll be a penalty for doing it now.
And any benefit to being certified later will be likely be grandfathered in. Right. Okay. So, you know, we're starting to wind down a little bit, but we do have a little bit more time. So one last time, if you do have a question, realtormagwebcast@gmail.com. Send it in. We can probably get a few more in. This is a great question. I just got asked. I would like to know where to begin the process. I'm on the board of a condo building.
Awesome. So you should go and watch this video on our website. It's realtor.org/topics/condominiums. And in the bottom right-hand corner on that screen is this video that the Orange County Association put together. And it's super great. It's only like 4 or 5 minutes. And it talks about here's what all the benefits are of getting certified. So look at that video. And then if you go to the FHA Condo Processing Guide, which is also on that same page of our website, you can see what the requirements are. It's a list of about 10 items you have to supply. So the weirdest one, I think, is like the plat. And so once you get that, you usually have to pay for that from your county. But once you get the plat, then it's basically your condo documents. It's your budget. It's your board of directors. It's your actual documents that have the rules of your community. It's your reserve plan for how much money you put into reserves and how much. Right now, the requirement for reserves is 10%. It's your owner occupancy level. So gathering all that information, anything that you can do to do that. Once a building is FHA approved, it just opens up the market for you for a lot more buyers who can come in and buy your units. It can only help improve the value of those individual units because you have more buyers that have access to purchasing those units. So I think there's lots and lots of benefits of getting approved. And as a realtor, and especially if you're on a condo board or if you manage condo associations, this would be a great way to improve the value of that property.
Now we're sort of talking loosely, Sahara, about buildings generally, but what are the profile of the buildings we're talking about? Is this a row house with 2 units in it? Same as a high rise? Is everything treated the same, or?
Yeah, no. So for FHA, there are some limits. So for example, you mentioned a row house with 2 units. For FHA purposes, a condo project has to have at least 2 units. Okay. However, I will say with those 2 units, they then have to meet all the other requirements. So the current owner occupancy requirement, the reserves level. This, in reality, is a little bit harder when you've got a smaller unit, but In terms of style, a condominium is like a structure, like a legal structure. So condos can be townhomes, they can be high rises, they can be small cut up, historic homes. So there's a lot of variety.
They could even be single family detached homes if it was just built as a condominium.
So it's not necessarily that the
Exactly.
You can't necessarily look at a building and assume that it's not eligible for FHA certification, but it's worth raising the flag a little bit if there's only 2 units or 3 units that you're going to need to check in on this.
Right, exactly. And again, the best way to check is go to HUD's website, use their certification lookup, their condo lookup, and it'll tell you.
So what if you want to get a spot loan on a building like that?
So with the proposed spot loan, it's a little bit different. They actually have a bit stricter requirement. So everything has to meet the FHA levels for regular condo projects. But on top of that, you have to have at least 5 units, for example.
At least as it's proposed.
The proposed rule, yes. So as it's proposed, we might be fighting that, but
Fair enough.
at least 5 units there. It can't be manufactured housing.
Okay.
So those are things to keep in mind.
Okay. Megan, a question that just came in. Are there any costs associated with being registered?
So HUD does not charge any fees to register to get approved. But you may have to, maybe things that it's easier to have an attorney put together for you in terms of some of the documentation. So there can be costs to the association to just gather all the information you need. But HUD doesn't charge a fee to get certified. You just may have some costs in obtaining the documents you need.
So I want to thank everyone for all the great questions. We're starting to come down to the end of this, but Megan, give us your takeaway. I mean, what is next for condos? I mean, it seems like there's a lot happening all at once. I mean, what do people need to be thinking about looking ahead?
So I think condos are a great opportunity for realtors to expand their market. A lot of millennials love living in condos. They want to be near shopping. They want to be near restaurants. They want to be able to walk to everything. A lot of these condos that are being built in these townhouse models are exactly what they're in. These town center models are exactly what they're looking for. So I think condos are really going to be a growing market. And so I think realtors have this opportunity right now with these changes that are coming that are going to ease the restrictions for FHA buyers, that realtors can really get in there and try and learn more about this, learn about how to get buildings certified, learn if the buildings in their community are approved, and if they're not, get in there and educate them on why they should get approved. I think this is a great opportunity and will really open up the market for a lot of, give you more inventory and also give you more buyers who are eligible to get into this market.
So I'm hoping we can get that slide up one more time, but because Sahara, I wanted to give you the last word. We try to do things like this. We've got information on our website. There's a lot of conversation about this, but people are going to have more questions. So if they do, where can they go and what would you recommend to them?
No, absolutely. So first of all, reach out to Realtors, National Association of Realtors. We're here to answer your questions. We have our information available on our website. Reach out to us. Specifically on current FHA situations, you can reach out to HUD has home ownership centers across the country. Those home ownership centers, we have links to them through our website as well, or if you go to HUD's website, you can find them. Talk to them, they'll give you information. So those are 2 great resources, Realtors and HUD.
Well, it's great. Thank you again for being here. If you missed any piece of this, we're going to have this webinar available up on our website at realtor.org. But